Hello, and welcome to today's topic. Today's topic is rising and falling wedges. As always, welcome to this channel. I try to break down simple strategies and make things very easy for you to understand. So we're going over rising and falling wedges today. This topic I call simple complicated, which means it's pretty simple in the application, but it's a little complicated in understanding it. But once you get the patterns down, it's pretty easy to understand. So let's start by the description. So we have a rising wedge. Now, what is a rising wedge? Rising wedge has support. So we have our starting line, then we're going to come up to our higher high, our new higher low, then we're going to have our new higher high, then we're going to have a higher low, then we're going to have a higher high, and then we're going to have another higher low, and then we're going to have a higher high, and then another higher low. So basically, we're squeezing the market together. So now for every support, we have a resistance line, okay? So basically, everything's going to come together kind of like a spring. Okay, what happens if you coil a spring together? It's going to expand, or it's going to basically explode. So that's what's happening in the market. The market's going to be squeezed together so much that eventually it's going to explode into a breakout. So rising and falling wedges is a good way to see which way the direction of that explosion is going to happen. So that is our rising wedge. So now we have our falling wedge. Our falling wedge happens to be the opposite, just the complete opposite of the rising wedge. So we have our resistance lines on top over here. So we have our starting point. We have our lower spot. Oh my God, speaking a little confused a little today. So once again, let's start that again. So we have our starting point. We have our low spot. We have our new higher low, our new lower low, our new higher low, another lower low, another higher low, another lower low, then we have another higher low. So eventually, as you see, the market's going to explode in a direction that the market's going to go. So, like I said, every resistance line has a support line. The same way as we have the rising wedge, we have our support on the bottom, we have our resistance on the top. So now on the falling wedge, we have our resistance on the top, and then we have our support on the bottom. The direction is just going just differently. One's making new higher highs and higher lows. The other one's making lower highs and lower lows. So one last time, we have our starting point, we have our higher high, our higher low, higher high, higher low, higher high, higher low, higher high, higher low. That would be in our rising wedge. In our falling wedge, we have our starting point, we have our new low, we have our higher low, lower low, higher low, lower low, higher low, lower low. Perfect. Now that we know what we're looking for, let's look at some patterns. Rising and falling wedges. Okay, let's get that right there. Perfect. Okay, same exact thing. Going up in the rising wedge, going down in the falling wedge. Okay, let's take a look at this real quick. Perfect. Now we know what we're looking for. Let's look at some examples. So we have our rising wedge. This is coming off of an uptrend. So we have our uptrend over here, and then we have our same thing. Our higher low, higher high, higher low, so on and so on. We'd want to put our stop loss here. We want to put our entry around here and our target down here. Well, why is that? Well, because for this rising wedge, this is a reversal pattern. So since it's a reversal pattern, that is the reason why. So when you have the trend matching the direction of the wedge, you're going to get a reversal. So what I do when I teach class is tell everybody an up and an up equals a reverse, or an up and an up equals a down. Now we have the rising wedge from the downward trend. So we have our new higher high, higher low, higher high, higher low, higher high, higher low. But in this case, like I said, this is a downward trend. So this would be a higher low, lower low, higher low, lower low, higher low, lower low. So on and so on. So we have our stop over here. We have our entry point over here. We have our target here. Well, what is the reason for that? As we have the downward trend with the rising wedge, well, that's because that's a continuous pattern. Okay, so let's go over that one more time. So we have an up and an up, or an upward trend with a rising wedge. This is a reversal pattern. We have a downward trend with a rising wedge. This is a continuous pattern. Kind of getting how this is working now? So now let's go the other way now. So now we have a falling wedge. Okay, so this is a downward trend and a falling wedge. Entry over here, target over here, stop loss over here. Why? Because this is a reversal pattern. Okay. We have an upward trend with a falling wedge. Enter here, target is here, stop loss is here. This is a continuous pattern. Okay, let's try that one more time. So guys, when we have let's go all the way to the beginning. We have an up and an up. This is a what? Reversal pattern. We have a down and an up. This is a what? Continuous pattern. We have a down and a down. This is a reversal pattern. We have a up and a down. This is a what? Continuous pattern. So the pattern was up. We come down with the falling wedge. We're going to continue with the rising of the momentum. So we have an up and an up on upward trend with the rising wedge. What would this be considered? Reversal pattern. If you said reversal pattern, you are correct with that. We have a downward trend with a rising wedge. What do we have here? Continuous pattern. We have a down and a down. This is a what, guys? Reversal pattern. Okay, so basically, if you have the trend matching the wedge, we're going to get a reversal. We have an up and a down, two opposites. So we have upward trend, downward wedge. What do we have? Continuous pattern. All right, guys, that's pretty much all it is when it comes to the rising and falling wedges, guys. Awesome work. Let's go over this one more time. Starting from the beginning, we have an up and an up. What do we have there? A reversal pattern. One more time, we have a down and an up. What do we have? A continuous pattern. One more time, we have a down and a down. We have a what? Reversal pattern. Great job, guys. One more time, we have an up and a down. What do we have? We have a continuous pattern. Now let's go for some examples in the live market. What do we have here, guys? We have a downward trend with a falling wedge. What do we have? We have a what? Reversal pattern. Down and a down. Reverse. Same thing. Down and a down. We have a reverse. Now we have a what? Up and a down. We have a what? Continuous. So look how the market played out. It went down. We have a falling wedge. We have a what? Reversal. We have an up and we have a down. Two opposites. We have a continuous. We have a down and an up. We have a what? Continue. Down, up. Two opposites. Okay, unlike math, two negatives do not make a positive. Okay, two positives do not make a negative. Okay, if you have two things going in the same direction, down and down, you're going to have a reversal. We have opposite ends. We're going to have continue. That's the main point that you have to get when it comes to these rising and falling wedges. If you have the market going down and the wedge going up, the market is going to continue going down. Same thing here. What do we have? If you take a look at my head and shoulders, we have an inverted head and shoulders, which shows momentum going up in a reversal. Okay, head and shoulders video. We have that. Just click on the link below when we have head and shoulders. So we have more videos for that. But right now we're going over wedges. So this is a what? Up and a down. When you have a up and a down, you're going to have a what? Continuous of the momentum. One more time, guys. We have a down and a what? A down. That's going to be a what? Down and a down is going to be a reversal. The trend is coming down. The wedge is coming down. The market's going up. Just like that. All right, guys. That's it for me when it comes to falling wedges. I hope you guys pretty much got this. Just remember that you have an up and an up. The trend is going to be in the same direction as the wedge. You're going to have a reversal. When you have the wedge and the trend in opposites, you're going to have a continuous of the pattern of it. All right, guys, if you have any questions, leave a comment below. As always, like, share, and subscribe. If you guys have any questions, like I just said, comment below and hopefully I can answer it. If you want, you can join our 60-day free trial and learn a talk and chat with me live. And we also do live trading signals. All right, guys, thank you for tuning in. Thank you for watching. Have a great day.